I've got Stephen with SimpleHedge joining me this week. Stephen, how's your day going, man?
Day's going okay. It was nice to see some of the markets come back after an absolutely brutal Monday coming over from the weekend. So I can imagine all the listeners are feeling the same way. It's a bit better today, but still needs a little ways to go here.
Your background, like you were a merchant at one point, weren't you?
I was, yeah, absolutely. Yeah, I was a merchant, both on feed grains, oil seeds, on oil itself as well. So I've kind of seen the whole export domestic biofuels industry and traded on both sides of it. Yeah.
So what would have been happening on your desk, do you think, if we had to kind of role play this? Like, would it have been hectic on your desk yesterday in that type of position, or would you have been calm, cool, collected, just waiting for the next day?
Yeah, I think it always, I would say every day can be hectic just because, again, this is an industry where markets can go haywire at any time, especially when you have a geopolitical uncertainty that's happening. So it keeps you on your toes. But seeing a day like we saw yesterday was, you don't see those ones too often. What was canola down 40 bucks a ton? Soybeans were getting pretty close to a limit down there as well. The last time I really saw anything like that was, what was that? We had canola at $1,200 a ton, and it limited down May of 2022. Was that 2022, 23? Yeah.
Yeah, I went down the rabbit hole of looking up like a blow off top and then the results of the canola market after that. And there was a couple of reference points back in the day that were a little bit nasty, but they're far and few for sure.
Yeah, exactly. But to your question, it's those days do get hectic. A lot of the, craziness, I guess you can say, is coming from what's actually happening in the margin. Is the margin going to be there at any time? Because we know with commercials, it all just depends on their ability to hedge off their risk, right? Which is actually sell the futures or buy the futures, whatever side of it they're on at any time. And when the market's moving really fast, you talking to someone that you're buying the actual physical cash from in that 2-minute conversation can be a very different story by the time you actually agree or don't agree to something, because the futures have just moved so much.
As a merchant, were you up like late at night, like talking to your customers and stuff like that across the world? Like, was it like a night type of job or not really?
Yeah, I know, same with all the producers as much, just the industry itself is a 24/7.
Yeah.
Right. So the problem is, or not the problem, but the reason is it's international, right? Like, these are homogenous products that are being traded across the world over, right? So your corn that you're getting out of the US really, sure, you have some quality differences, but for the most part, is no different than what's happening in Brazil, what's happening in South Africa, what's happening in Eastern Europe, right? So to know what's happening in those areas as well it's 24/7, and the markets are almost running 24/7 too. So yeah, you're talking to all the different offices, and there's always massive group chats, email threads about what's happening in different locations and how they're reacting to the market at their open, what's happening in cash. Yeah. So it becomes like nonstop your whole life.
Yeah. And rumor is we may not, it may be 24/7 for trading here in the near future as well. We're not quite there yet, but we're darn close. And might be some of that in the future.
Yeah. Feels like it's 24/7 though.
Oh yeah.
Regardless, right?
It does. The only break feels like Friday afternoon. Feels like the only real break, or Friday evening maybe. And then you start to see I don't know, I'm not smart enough to know what these are, but I don't know what to even call them. Like, sometimes it's the synthetic markets, or, Saturday morning, there's a post saying, oh, well, crude in some crazy backdoor market is up 5% or 10% right now. And we're like, wait a second, it's Saturday. What are we talking about here?
Yeah.
But yeah, there's definitely some other mechanisms out there as well.
Oh yeah. Cause at the same time, you don't need the markets open to be trading the cash, like the actual physical. It's generally better depending on what you're trading, but some of that stuff can still be happening when markets aren't open, right?
Yeah, for sure. So what's going on in SimpleHedge these days? Like you guys have your Twitter handle's been on fire here. I was actually just chuckling because a couple days ago, there's Kramer not buying the 2007 scenario, and then you guys write, "We're screwed." But what's been going on at SimpleHedge in the month of March here?
Yeah, absolutely. Well, just all great things too, and exciting things that we have as well. So, we're continuing to see a lot of growers, in our places of North America that are starting to understand really the importance of risk management and the need to have that a part of their marketing decision. And that's just been such a snowball effect. When you get someone in there that's starting to look at, when they're seeding their crop and prices look attractive, but you have a brutal basis on new crop, right? And it's like, man, I wish I could lock in this cash. And for the longest time, and just like anything, if you even look at equities, like some of this access just wasn't ever really there or available to the average person, which like SimpleHedge is breaking that down specifically in this ag market or ag industry to give those producers that opportunity to say, hey, I can turn to the financial side and do futures and options. So we're really just seeing a really big pickup on it. One of the biggest things that, obviously the hurdle with anything is education around this, understanding, right? Because it could be intimidating at first, but that's always just kind of like one of those fronts where it comes across as intimidating. And then you actually understand that, hey, this is pretty basic. If you ever hear people talk, like, oh, Wall Street likes to make all these fancy words and stuff for something that's really basic, right? And that's how a lot of these financial markets are. So yeah, really exciting. We got our SimpleHedge Pro that's about to be released here too, coming up. That's got a bunch of educational content, all focused around what the producer's perspective is from, people like myself as a merchant that's traded, what we look for, what we're seeing in the markets, how to handle that, all that sort of thing. So, and it comes with the full education, market analysis, automatic contract entry as well to really amplify that physical side of tracking. So a lot of really exciting things, Ryan. Yeah.
Good. Well, I appreciate that. You talked about education. Is that a feature that's available right now, or is that coming in the next little while? The education side.
Yeah, so we've got some education out already, and it's in the app. There is some videos to get you familiar with kind of what the education would look like, how to go into that. And then for some, monthly fees or anything like that, we go into some really deep dives on some full videos, that get into the really nitty gritty, but from a producer's perspective, nitty gritty with that high level effect where it actually matters to you. When you look at it, we just did a video here about taking delivery, and when you get into the nitty gritty of the econs of it, does a penny here, a penny there matter? Not really, but for the producer, what is actually happening, why it's happening, and that's the sort of teachings that we're really trying to get across.
I have a lot of definitely some of the more frequent questions I get is, I'm a young producer, kind of starting out, like. Looking for, I get guys will be like, what do you have for book recommendations or resource recommendations? Is this something? And actually, even yesterday, I got a message from a guy saying, hey, I'm looking for something for my partner, for my wife to start to learn and get a grasp on some of these terms and some of this stuff. Is that kind of where you're focusing, Stephen? Like, can those individuals, is this a resource that may work for them in the near future?
Yeah, I think that's the perfect kind of people. Like, we do it right from understanding the basics. What is a basis? What is a futures contract? Really go through that. What is hedging? What does that really mean for physical and financial? And then we go all the way into getting to advanced strategies that you can look at. Because we really want to make sure that it is a program that is right there for that individual that needs to learn the terms, getting into farming, taking over an operation from parents, right? And hasn't seen that trading side maybe as much. And this is a way for them to really get in, learn it right from the basis, and can take it all the way to an advanced level as well. Okay. So it's hitting all of those ones. Yeah.
Awesome. Well, I look forward to directing. When I get those questions, I'll know where to send them for sure. So that's great.
Absolutely.
So I wanted to talk on X here the other day. You guys were talking about the math of hobo or boho, I guess is the right way to say it. But fueling the field, why $140 oil could send ag prices to the moon. Now, I don't want to leave it hanging on that cliffhanger, but do you want to walk us through what exactly you're talking about here, what you've kind of modeled out, and some of your findings as well?
Yeah, absolutely. So I think one of the biggest things that we need to clarify nowadays, and it's so different than what it was even 5 or 6 years ago, is the amount of biofuels. And now we have an RVO that's looking pretty large as well, potentially, or the rumors go.
That's coming, right? So we're recording this on St. Patrick's Day, and that's coming in the next couple of weeks or less, right?
Exactly. And the numbers obviously been growing as well, just what the crush capacity is and what the refining capacity is for this. But so to the point of it is, we're seeing ag commodities become very correlated to what energy is. Now, there always was a degree, because biofuels, in fairness, have been around for 25, 30 years, but not to the amount that it is. I mean, they're talking, you're going to get to a point where it almost seems like every soybean in the U.S. is being crushed, and that oil is basically all going into biofuels. So at that point, your soybeans are going to be extremely correlated to whatever energy is doing and where the margin is. And so that's what we wanted to bring, is that we understand that producers might not see that or understand that. Maybe you just read about it and people are saying, hey, energy's up, and so ag's up. But we wanted to dive into why that happens, and why when you saw energy get to 120, that every single ag commodity was taken off, not just your corn for ethanol, but it was your oil seeds, because of where so much of that oil that's being produced from these crush plants is actually ending up. It's no longer just in food. It's mostly actually going into fuels.
Right. And so you started to go through like some what if scenarios, and what came out of that when you were starting to do the, what if the market crude goes to this level, or well, and actually before we get to that, even like what did you find for relationship? So where you're talking about how, there's more use in the biofuel space or whatever that is versus food, or, I don't know if I said that right, but like, what did you find in that, back testing this at the start?
Yeah, absolutely. So one of the things was just the high correlation. It was basically almost a near perfect. So like a +1 is near perfect correlation, and -1 is perfect. What is it? Opposite correlation or something. I forget what the actual term is, but we were almost near a full +1 on what soybean oil was tracking to ULSD. And that was basically, we narrowed it more down to a data set of just the past few years, because of where the impact or importance, I would say, of soybean into biofuels has been. So if you went back further, you start to lose that correlation, because you go back to where soybean oil is more focused on food. So we found almost a near perfect correlation to really the energy markets on soybean oil, which I think if you talk to anyone that's trading from a commercial side is, yeah, that's kind of obvious. Well, it's not obvious to anyone, and let's actually dive in and back it up with some facts and test in the models. So then we also wanted to take it out a little bit further and find out where beans, soybeans, the seed, and canola, and kind of how that fit into the equation as well. And so we continue to run through that, and we wanted to identify different levels of where WTI would get to, what that meant for ULSD, which is diesel. So that's exactly what, biofuels, renewable diesel is trading off of. So we got to like 120, we did it to 140, and it's not perfect, but this is just things that we at SimpleHedge want to go through and look and be able to provide an analysis to our users about things that they should be on the lookout for. That let's not just say, oh, great, energy's at 120. Now my input costs are really expensive for my fuel for my farm. And it's like, yeah, we understand that is something, but at the same time, what you're producing has also just skyrocketed up in value. What type of value, what numbers can we look at these different levels?
Yeah.
And so we went through that here, and, we took like our base at the 96 on WTI. Basically, we did that as our base to get our numbers right and then see if we could back test it. Gave us bean oil at, 69 cents, which is pretty well where bean oil was, right? For the most part, almost right there. Gave us $12.30 bushel on soybeans and $740 for canola. Now, this was run, right? And that's where exactly soybeans and canola were trading at.
Yeah. Yeah.
And so we tested it there, and then we started to try and level it up to the different energy levels as well, based off of those same correlation factors, if you got to that. And it gave a pretty interesting story, I think, is the key thing, is where these prices could go. And it's not saying, hey, these are what's going to happen to the prices, but these are numbers to look for, right? Yeah. And then so if you're saying, hey, I think, WTI and crude oil is going to get to 120, 125, whether it's on Brent. If you think that, then these are some numbers that you might want to be looking at to target, because that's kind of what the correlation has modeled out as. So again, not saying this is what's happening, but it was, let's look at some numbers that relate to ag based off of what's happening in the energy market, because of how key that is. And let's find some numbers that actually make sense. So
as of recording, WTI is trading up about $3 a barrel and in the $95 to $96 a barrel range. So that's where we're at today. So when you started looking at some of these bigger, rounder numbers or kind of key numbers, what did you see? Like, what did it work back to, starting with crude at this level and then working your way back towards canola?
So I guess like one of the things that we saw, and we know with canola as well, there is going to be more of an energy premium to it because it's, let's just say 42.5% oil content, right? Which is much more than your soybean oil as well. So the seed itself does, when you crush it, theoretically have a better oil yield for when the energy markets are off. Right. And you'll see even the difference when you get soybean, when meal's really taken a hold of the market, you'll see soybean has a better, really essentially spread versus canola too. Yeah. And so what we saw then obviously was canola was getting obviously a better premium really to what their per ton value is from that side because of the higher oil content as you went up as well.
Sure.
And the other thing what was kind of interesting is when we looked at it is just comparing against prior years. Like this one wasn't specifically going right into a fundamentals. We were kind of looking at what some technicals are that end up trading in these certain time period markets or certain situation markets, I should say. Even the numbers that we came out with were pretty much lower than what we saw at some different situations of energy. But the other thing is when you look back at prior years, there was less crush capacity. There was less biofuel capacity as well, right? Okay. And so there's lots of other things, stronger export markets, both for soybeans and canola. I know that's kind of changed recently with China back in. But as you said today, we're back up at 96 a barrel. Like we're not seeing the same numbers that we modeled out with, right? And that's because the export market on soybeans has significantly changed in the matter of 24 hours, and it's taken its toll on the rest of the oil seeds. Yeah.
Apparently pushing a meeting back a month and not seeing an 8 in the tweet or whatever on the soybean purchases from China or from the U.S. to China certainly had an impact as we started the week. So, yeah.
Exactly. And I think that also just even highlights when you say you have a strategy or a hope, right, to say, hey, these prices are going higher. Mm-hmm. The risk management aspect is that these are very marginable. I just want to make sure that I can at least protect my downside. And if the market does go higher, fantastic. I can partake in that upside. That's if you're looking at put options, right? Lock in a put option. If the market has this instability, which it has for such a long time, or volatility, having these put options and risk or protecting yourself on the downside, but still being able to partake on the upside is just becoming so key too. I think you probably know even better than me. When you look at it 10, 15 years ago, having a $5 move on canola was like, holy, like, wow, canola's up $5. You know?
All right, Steven. So, I've been looking back at, past years and trying to find like historical references, what we're going through right now, when did this happen before and what do the markets do? And it could take like a month or two for the market to move like $40 a ton. Like it was like, you'd look at a whole year chart and you're like, wow, this thing moved like $70 throughout the whole year. And we had a $40 move. One $40 move on Monday, followed by a $35 move on Tuesday. And here we are. If it doesn't move by $10, do we even look at it anymore? We're like, oh, it's not doing anything today. It's just moving by $10, right?
Yeah, exactly. And I think that's what's been happening a lot is, these $10 moves, people are like, oh, it's a sideways move.
Yeah, it's nothing.
Yeah.
It's nothing. All right. So did, obviously, I don't know, maybe you do have the energy market figured out, but you probably won't share it with us if you do. But we don't know where this is going, right? So, I saw the numbers, how you would correlate it back potentially. If crude went to 140, canola futures could look at a certain level, which was nice and big, nice big number there. I don't know if you want to talk about those numbers at all, but I was going to ask, like, how would you treat this environment? Like if you're sitting there as a farmer that's going to grow this stuff, how are you looking at it through those eyes?
Yeah, I think that's a really good question, is looking at it, especially from a producer's eyes. And I think one of the best advice that I've still ever heard in my life is, and I know probably producers have heard this a lot, is they know their operation and they know kind of what their margins and stuff are from, on a per acre basis, all that goes into it. And so there has to be a degree that they want to look at and say, okay, this is a very profitable at these levels. And it might go up, but let me lock in some of that. And that is, if you're looking at new crop right now and where prices are and where prices could go, and you're saying, all right, sorry, I'm not sure where the X is at right now, but if I'm looking at canola, let's just say it's at 740, or I think it's at 738 or whatever.
Not far from that.
Yeah.
Yep.
And I say, that's a really solid margin profit that I can make per acre. If I'm looking at what my average yield is, great. And if you go and you look to your local buyers and the basis is really brutal, like that's fair, and say, I don't have to lock in a basis. I don't have to go do that and lock in a cash. I can turn to the options market and I can find a put option that is going to make sure I'm protected on my downside, but that if this does play through and we do see 120, 140, and canola and oilseeds take off, I still get that upside. And I had never committed actual physical tons. So that's what I would say. I would say you really need to look at what your margin is, what you're comfortable with, and say, is this a good value? Let me lock it in, at least with the put option. And if the market goes higher, great, I can partake in that upside, exit out of the put option, then go sell some cash. Or if it doesn't pan out, well, guess what? You still locked in at really high price because you had that put option on. And so that would be my recommendation. If there's, as they say, if there's really good margin in it, you should capture that, because a lot of the time that margin doesn't last forever. Because what happens is everyone runs into that same trade and disappears pretty quickly. But if it is there, you capture it, or at least you protect it, right? For the chance that it does disappear.
Yeah. Yeah. And I think the one thing to realize too is that, like earlier today, I had some 680 and some 690 canola puts off the NOV. And I ended up rolling those up. I ended up rolling that up to 720s and 730s. Was that the right call? Time will tell, but I wanted to raise my floor a little bit. And so, you can look at this stuff. It's not like it's one and done. There are strategies that you can consider as the market conditions evolve and change as well. So, yeah.
I think you hit it on the head there. Is the advantages, like you said, when using the options is, if you have a local buyer, you're tied into that physical contract, and you're going to be really penalized to exit out of it if the market's starting to get better, right? Whereas
if they let you.
Yeah, exactly. If they let you. Whereas, you go into those put options and stuff, like it's a liquid tradable market that you can enter and exit out of. Right.
Yeah.
So
yeah. You control it. You get to control it. In a market that's trading all the time, you get to control it. And that's the ultimate power right there. One last one for you, Steven. So put on your old merchant hat for me one more time. I've been frustrated because the wheat basis and even canola basis here, futures rally and basis gets worse and worse. I had a Kansas City wheat futures rally of 60 cents a bushel, and lo and behold, my CPS price stayed the exact same at the local elevator. What is going on? What are those merchants doing to us in the background? And how would you have handled this from a merchant's perspective?
Yeah, I think to that point, you also have to look at what the time period it was, because we have had a lot of volatility in the Canadian dollar, right? So a weaker Canadian dollar usually entices some sort of exports, right, and adds some value to the growers, both on the USD traded futures or commodities, as well as on the CAD one, right? So if your dollar gets weaker, it just means it's cheaper to buy from Canada, kind of thing. The wheat one's a tough one because it can just be a product that prices ran up, buyers just backed off for the time being, as that is what happens. Market can get panicked / scared, and sometimes the best thing is just to hold off for a second to see how things play out. Do you really want to be the person that came in and bought wheat after a 60-cent move and then see the next day it dropped 20 cents, right? As
right.
When you're an importer of buying a 60,000 ton vessel, that sort of thing, and
sure,
their basis was well off. So there's probably a bit of a play to that, and that would be the merchants saying, okay, we need to de-risk or just not take on any more risk ourselves right now. So put on maybe a not as enticing basis here to hold off on buying anything more. The other thing is, depending on the time period, is how full are they, especially if it's in the buy. And I would say that's the same thing on with canola as well, is when you do have these massive run-ups, people might just hold back for the time being. Lots of phone calls happening, trying to figure out kind of what we talked about earlier, where you're having a 2-minute conversation about to get something done and the econs have changed drastically. So it does become that people just need to sit back and see what happens. And then generally that can actually play out in the basis, where it's like all the buyers have backed off for right now. So we need to back off our basis till we see the next wave of demand. Sure.
All right. Well, you're making it sound very logical, and you're trying to lower the temperature down for me a little bit. So I appreciate that, Steven. I appreciate that. All right. How could people find SimpleHedge? Where's the best spot for them to go if they want to get more information on getting linked up with you guys and hooked up? Where should they go?
Yeah, absolutely. I mean, one of the best spots is always a website, simplehedge.com. You can go to our website. You can set up an account on the web platform there. You can also go into the iOS App Store, SimpleHedge, and download the app. It's completely free for it, so you can set up your whole operation on there, play around with it, really understand it. You can track your physical. If you're looking to get into more learning and education about that, I would definitely check out the Learn tab that we have and try out some of the free videos we have posted. And then if you want to take the next step to diving deeper into understanding markets and risk management, then we'll look at the SimpleHedge Pro section that has the free content, has the market analysis, and all that stuff in it. So yeah, on the iOS App Store and simplehedge.com.
Perfect, Stephen. Well, thanks for joining the show this week.
Yeah, right on. Appreciate it, Ryan.